right, this is the weekly coffee video for the week of Monday, August 19th. We now actually reflects the December contract. That rollover did occur last week. Both the weekly December contract charts, which you can actually see right now, and the weekly continuation volume-based rollover charts reflect the December contract. I'll be showing you some of those as well. I guess I could start right here. You've got a move low here in the December contract at 93.70. That is a session containment level downside this week. Overall, we still remain bearish into September trade below a region that starts at 99.40 and ends at 99.95, which I'll show you in a moment. But 99.40 is a descending channel top over the last couple of months for the December contract itself. It can absorb buying into September trade, and in fact, below which the 83.84 handle remains kind of a 3 to 5 week downside objective, which I'll also show you in a moment. Let me actually take a look here at the newsletter itself and see. Well, let's see. I'm trying to bump this up, but it doesn't want to. Oh, there we go. There it is. There it is. There it is. All right, let me back off here just a little bit. Okay, so 99.40 you can see here is that channel top. I'll show you 99.95 in a moment, but holding below the 99 handle resistance maintains a heavy dynamic into September trade. On the way down, we've got 93.70, which I show you here, able to contain session weakness. There is the possibility it could contain weekly lows. I mean, it is a low that goes back to last May for the December contract itself. But overall, given the continued downward tempo, I wouldn't be surprised to see a violation early to midweek of 93.70. By that I mean a settlement below. And if so, then you should expect this 89.80 to 90.25 region, which is a range of support that should absorb weekly selling pressures. And that's about it. I'll show you those in a moment as well. Overall, still expecting 83.60, 84.40 over the next 3 to 5 weeks. And if we close this week below 89.80, which would be a significant down week, similar to what we saw maybe a month ago, if we settle below 89.80, then that 83.60 to 84.40 3 to 5 week target is likely within 1 to 2 weeks, where this contract, rather this market, the coffee market, could bottom out through the balance of the year. And I'll show you that in a moment as well. On the other hand, if we close the week above 99.95, that indicates not only a good August low, but I think probably a good seasonal low, maybe a good annual low. I would then expect 107.75 within 2 to 3 weeks. And there is the possibility we could continue all the way into the 111.85 to 115.50 long-term resistance area, which is significant. This could almost be called annual, this area up here, in that if it's tested, say, by the end of September, it could contain buying through the balance of the year. And I'll show you that as well in a moment. Let's take a look at the charts. This is actually on page 1 of the newsletter itself. 99.40, 93.70. This is 99.95. Now, this is the weekly continuation chart. This high was placed by virtue of the rollover. Actually, that was the high last week for the September contract. And by the time we rolled into December later in the week, the December high was 100.60. But I think given the fact that we've got kind of this outside week here as a low, and this is a little fictitious because of the rollover, but even if we do settle above 99.95, we also settle above 99.40. That should pivot the market north into September trade. We then have a recovery buy signal. How high is a big question. As I mentioned a moment ago, at least 107.75 within several weeks, but quite possibly this more significant region, say by the end of September. 115.50 is kind of our base of longer term resistance. We didn't really test it back in July, but we came very close to it. Let me show you the other. Okay, while I'm at it, there's no rhyme or reason to the order here. But this 93.70, once again, this is the December chart. 93.70, we close below it. Well, actually, I've got 89.80 to 90 and change. This is our big support area on the December chart. And what I like about this long-term channel formation, it's consistent with other support on the weekly continuation chart in the 83 handle, which I'll show you in a moment. And this is our big area that, if, say, tested by the end of September, could certainly contain selling pressures through the balance of the year. From here, we could stabilize and actually rotate higher or rotate into recovery mode over the following several months. This is, okay, here we go. You just saw the 84.40 December contract. Here's 83.60 in the weekly continuation chart. So it's sort of, can any slippage below this significant channel structure, say by the end of September, could certainly be captured by this 83.60 formation on the weekly continuation chart. I could talk about 66.10. It becomes a kind of a next 1 to 2 month target if we closed a week below 83.60, but I don't see us closing below 83.60. I do believe that 83.60 to 84.40 region could absorb selling through the balance of the year. This is 90.25. This is the weekly continuation chart. I like this. You know, it's just a former channel structure that we settled above last May. We came close to testing it the following 2 to 3 weeks afterwards, and then the market launched into this significant rally to significant resistance. But 90.25 is a weekly containment level, and I do believe I showed you 89.80 a moment ago. So that's good for containing weekly selling pressures. And there's 111.85. This is a significant weekly continuation channel top that we did test last July. It did hold nicely, and it is the start of a range of resistance up to 115.50. Now, once again, we're not going to see that between now and the end of August. But if we did close above 99.95 this week, which I showed you a moment ago, then I think there is the possibility for 3 to 5 weeks bullish recovery into that 111.85 to 115.50 region. But until then, 99.40 to 99.95, able to contain buying into September trade, and below which this market maintains a bearish tempo into September trade, 89.80 to 90.25. Where is that 89.80? I just showed you 90.25 a moment ago. I like finding synchronicity on these charts, you know, where you can find common support on two different charts. And for some reason, I'm not finding it right now. I apologize. There it is. There it is. The December weekly chart, 89.80. So you've got that 90.25 channel, former channel top I showed you just a moment ago that we kind of traded above here for a couple of weeks before launching into a rally on the weekly continuation chart. But the December contract itself shows decent support this week at 89.80. So that's that area here. If we close any day this week below 93.70, then you should expect this lower area within a matter of days, able to contain weekly selling pressures, possibly selling through next week. But overall, still expecting this lower area over the coming weeks, holding below the 99 handle, 83 to 84 handle in reach, say by the end of September, end of October at the very latest. Closing above 99.95 indicates a good low through September, then expecting at least 107.75 within 2 to 3 weeks, and quite possibly the significant resistance area again by the end of September, where we can top out through the balance of the year. And as I've been mentioned, I'm going to finish with this. As I've mentioned in previous videos over the last couple of months, the last month or two, holding below this big area does sort of maintain, I'm going to say allow, but really I think the market wants to test this lower area in the coming months. Holding below the 111.85 to 115.50 region does maintain essentially a 2 to 3 month downside target in this 83.60, 84.40 area. And so long as we continue holding below 99 handle resistance, we should test this lower area by the end of September. And that's really all that needs to be said for this week's December coffee.